Today, the world witnessed significant shifts in the economic landscape and global geopolitics. From critical decisions by the Federal Reserve to ongoing tensions in the Middle East, these stories shape our future. Here are today's top 10 stories you need to know. As of July 30th, 2026, global supply chain issues continue to pose challenges for many industries. The lingering effects of the pandemic and ongoing geopolitical tensions have created disruptions in the flow of goods and services. Companies are facing delays in production and shipping, which are impacting their ability to meet consumer demand. Many businesses are actively seeking solutions to mitigate these disruptions, including diversifying suppliers and investing in technology to enhance logistics. The impact of these supply chain challenges is felt across various sectors, from manufacturing to retail, as companies strive to adapt and remain competitive. As the situation evolves, stakeholders will need to remain agile and responsive to ensure a smoother flow of goods. Looking forward, addressing these supply chain issues will be critical for economic recovery and growth. As of July 30th, 2026, oil prices are experiencing fluctuations as geopolitical tensions in the Middle East continue to impact global markets. The uncertainty surrounding the region has led to a rise in crude oil prices, with analysts warning that continued instability could further escalate costs. Factors such as supply chain disruptions and potential military actions are contributing to this volatile environment. The oil market's reaction reflects broader concerns about energy security and the potential implications for global economies. Investors are keeping a close eye on developments in the region, as well as actions taken by OPEC and other oil-producing nations. Looking ahead, the energy market may face additional challenges if tensions persist, prompting businesses and consumers alike to brace for possible increases in fuel prices. As of July 30th, 2026, the latest earnings reports from various companies reveal a mixed bag of results, reflecting the ongoing challenges faced by businesses in the current economic climate. Some companies, like Intel and Fiserv, reported strong earnings that surpassed analyst expectations, signaling robust demand in their sectors. Conversely, others, such as Elevance Health and Workday, faced declines in their stock prices following disappointing earnings reports. Elevance Health stock fell by over 6% after it raised its full-year guidance, indicating potential challenges ahead. Meanwhile, Workday's shares dropped significantly, continuing a downward trend that has seen a 25% decrease over the past 6 months. These mixed earnings reports underscore the volatility in the market and highlight the varying impacts of economic conditions on different sectors. As investors digest these results, they will be looking for signs of stability and growth moving forward. SpaceX is currently facing significant challenges regarding its initial public offering as of July 30th, 2026. Following a steep decline in stock prices, the company is now struggling to maintain investor confidence. After reaching a post-IPO high, SpaceX's shares have dropped 41%, leading analysts to reevaluate the company's market potential. This decline has raised alarms, particularly as SpaceX had been viewed as a leader in the aerospace sector. The broader economic climate, marked by rising interest rates and geopolitical tensions, has exacerbated concerns about the aerospace industry's volatility. Despite this downturn, some industry experts remain optimistic, projecting that SpaceX could recover and potentially see substantial growth in the coming years. The company is well-positioned to leverage its capabilities in launch services, broadband, and space exploration. However, to regain momentum, SpaceX must address investor concerns effectively and demonstrate its resilience. In the coming months, the focus will be on upcoming launches and partnerships that could restore confidence in its innovative technologies. As of July 30th, 2026, the global economic outlook remains fraught with uncertainty, largely driven by rising inflation rates and geopolitical tensions. Economists are closely monitoring the situation as countries grapple with the dual challenges of maintaining growth while controlling prices. Recent data indicates that inflation continues to exceed expectations, prompting central banks worldwide to reconsider their monetary policies. The Federal Reserve's decision to hold interest rates steady is part of a broader trend among global central banks aiming to strike a balance between economic stimulus and inflation control. Market analysts warn that persistent inflation could lead to a slowdown in consumer spending, which is crucial for sustained economic growth. Additionally, geopolitical tensions, particularly in the Middle East, have the potential to disrupt global supply chains and exacerbate economic challenges. Looking ahead, businesses and policymakers will need to remain vigilant and adaptable in the face of these evolving economic conditions. The merger and acquisition landscape has been a focal point for investors as of late July 30th, 2026. In the airline industry, discussions surrounding potential mergers have stalled, notably between United Airlines and other major carriers such as Delta and American Airlines. This comes at a time when rising fuel prices, driven by geopolitical tensions, have prompted speculation about a wave of consolidation in the sector. United Airlines' CEO had previously initiated talks with Delta, aiming to create a robust alliance among the leading U.S. carriers. However, negotiations have not progressed, leaving many investors questioning the future of M&A activity in the airline industry. Meanwhile, other sectors continue to explore strategic partnerships and acquisitions as companies seek to enhance their market positions amid economic uncertainty. Analysts suggest that while the current climate may appear challenging, opportunities for strategic growth remain. As the market evolves, stakeholders will be closely monitoring developments in this space. As of July 30th, 2026, tensions in the Middle East continue to escalate, particularly following recent military actions in contested regions. The Israeli-Palestinian conflict has seen a resurgence, while Iran's nuclear ambitions heighten concerns among neighboring countries. The situation has drawn international attention, with major powers like the United States and Russia involved in diplomatic efforts to de-escalate tensions. However, progress has been slow, hampered by deep-seated mistrust and competing interests. The ongoing conflict has significantly impacted global oil prices, leading to fluctuations in energy markets that ripple through economies worldwide. Analysts warn that prolonged instability could result in increased energy costs, affecting everything from transportation to manufacturing. Moreover, disruptions in supply chains could exacerbate inflation and economic uncertainty in several nations. As countries navigate this complex geopolitical landscape, there is a pressing need for renewed dialogue. Looking ahead, the potential for both conflict and resolution remains, with upcoming international summits poised to either foster cooperation or deepen divisions in the region. Following the Federal Reserve's decision to maintain interest rates, the stock market experienced notable fluctuations on July 30th, 2026. Investors reacted to the news with a mix of optimism and caution, reflecting ongoing uncertainty surrounding inflation and economic growth. The S&P 500 and NASDAQ indices showed moderate gains in early trading, indicating a positive reception to the Fed's decision. Historically, interest rate adjustments have significant implications for borrowing costs and consumer spending. While the Fed's decision alleviated some immediate pressures, concerns lingered over the persistent inflation that has affected household budgets and corporate profitability. Market analysts observed that although the Fed's stance was a relief to many investors, the underlying economic challenges remained daunting. Companies like Intel and Pfizer benefited from positive earnings outlooks, which helped bolster market sentiment. Conversely, stocks such as Elevance Health and Workday faced declines, illustrating the uneven recovery across different sectors. As the market digests the Fed's decision, investors will keenly watch upcoming economic indicators and corporate earnings reports, particularly focusing on consumer behavior trends that will shape the economic landscape heading into the fall. Apple Inc. released its fiscal third-quarter earnings report on July 30th, 2026, showcasing impressive results that exceeded analyst expectations. The tech giant reported a significant increase in iPhone sales, buoyed by strong demand in international markets, particularly in Asia and Europe. This quarter's performance is particularly noteworthy as it highlights Apple's resilience amid global economic uncertainties, including fluctuating currency values and ongoing trade tensions. Analysts had been closely watching sales trends and gross margins, which are critical to Apple's overall profitability as the company continues to diversify its revenue streams. Following the earnings announcement, HSBC upgraded Apple's stock to a buy rating, raising its price target to $366. This move reflects positive sentiment in the tech sector, especially considering Apple's strategic initiatives in services and emerging technologies like augmented reality. The strong earnings report is expected to have a ripple effect across the tech industry, potentially boosting investor confidence and leading to increased investments in similar companies. Going forward, investors will be keen to see how Apple continues to navigate challenges in supply chains and its plans for new product launches, particularly the anticipated release of the next generation iPhone later this year. In a highly anticipated decision, the Federal Reserve announced on July 30, 2026, that it would maintain interest rates despite persistent inflation concerns. This decision comes amid rising consumer prices, with the Producer Price Index reported to have increased 3.4% year-on-year. The Fed's policymakers faced considerable pressure to act decisively as inflation continues to burden American households and businesses, eroding purchasing power and straining budgets. Federal Reserve Chair Kevin Warsh emphasized the importance of controlling inflation while also considering the current job market's weaknesses, which include elevated unemployment rates in certain sectors. Investors had speculated that a rate increase could be imminent given the backdrop of stubborn inflation and its implications for economic stability. However, the Fed opted for a cautious approach, maintaining the existing rates to assess the ongoing economic situation and avoid stifling growth. This decision reflects the Fed's delicate balancing act between fostering economic expansion and curbing inflationary pressures. Moving forward, analysts will be closely monitoring the Fed's next steps, particularly in light of the upcoming economic data releases. Additionally, the potential impact of artificial intelligence investments on productivity and job creation will be crucial. The Fed's future policy decisions will likely hinge on these factors, shaping the economic landscape in the month. Thank you for tuning in to today's news recap. Which story shocked you the most? Let us know in the comments, and don't forget to like and subscribe for more updates.